Hussbus bus stop. What is up, everybody? JP Hussey here of the Hussey Team Mortgage Advisors with this week's Hussbus bus stop. Hope everybody's well. Bit chilly out here in the Philly area. As you can see behind me, look at those clouds. That's awesome. But beautiful day, a little chilly. It's December 3rd. It's holiday time. I'm loving life. Anyway, a couple things. I will make this quick today. First things first, the FHFA, Federal Housing Finance Agency, every year looks at conforming loan limits, all right, and usually raise it depending on where the market's going, lower it. It's only going up. There's a good chart I could get you to show this, okay? This means two things. Well, first thing, the new limit is $647,200, up almost $100,000 from last year. That is huge. I believe that's the biggest increase of all time in 1 year. So what does this mean for you? Two things that I can think of. Number one, now you won't be subject, if you're in that range, if your max loan amount is $647,200, subject to jumbo guidelines, pricing, whatever it is, all right? So if you've heard of Fannie Mae, Freddie Mac, this is what that means. You can go typical conventional financing, better terms, similar guidelines wherever you go. It's really the bucket you want to be in. I mean, this means that you could buy, I don't know the exact number, like a $690,000 home, put 5% down. I think that's how the math works. Maybe it's a little bit less, 680-ish, and get typical conventional financing. That's huge, right? Cash out refinancing. A lot of times it's tough to do a jumbo mortgage and get cash out of your property, right? Now you can go that much higher, right? It's just big right now for the general consumer, and that's great. The other thing is, number two, and what I've been talking about in some other videos, people get nervous. Is this 2008 again? Are prices inflated, this or that? Sure, I think the market has to soften a little bit, not nowhere near crashing. But if the FHFA is raising loan amounts by this much, and these are the big players in the game, they don't think anything's going to crash. They think values are going to stay where they're at, go up. It just makes sense. Like, the big players know what's going to happen. They run a lot of stuff. If they're willing to give this much more credit, they do not think values are going to crash. I don't know how to make it any more simpler. I don't see a crash company. I believe things have to soften. Sure, the world's crazy right now, but I do not see anything going nuts right now. This is only a good sign for not only housing, which is a big part of the economy, but for the economy in general. So what does this say? If you own a house, cash out refinances are big. Rates might be ticking up a bit. Forget about the fear mongering. Rates are still low. If it goes up a half a point in rate, they're still low. Look to use the equity in your house. And this isn't a pitch. This is some things I'm personally doing. Use the equity in your house. This is why home ownership is so much better than renting. Use that equity to invest in other things. Make your house better. Invest in your life. I don't care what you invested, whether it is crypto, whether it is other real estate. Get it together. Use your resources. There's always a big debate on whether I want to be, or not me personally, but whether you're debt-free or using other people's money, aka credit, to do what you want in your life, right? Think about that, all right? If you have any questions, please, what's up, biker? If you have any questions, please reach out to us. We're here to help, and have a great holiday season, but you'll see another one from me or Nick before Christmas. Have a great day. Later. Hussbus bus stop.